We are here with Unum Insurance, and we're really excited to be out here today. We have been your voluntary term life insurance carrier for quite some time now, but we are actually going to be offering 2 brand new benefits this year. So this is the first time anybody at LACOE has ever been introduced to these benefits, so we're really excited. Today we're going to talk about those 2 different benefits, our individual short-term disability and whole life insurance. We're going to talk about how you can enroll in those benefits and the enrollment deadline. And then Lindsay and I will stick around for a while to see if anybody has any questions, if you want to ask anything one-on-one. But please feel free to ask questions during and after the presentation as well, because chances are if you're thinking it, somebody else in the room probably is too. So it's good to kind of address it in front of the group if we can. Okay? So the 2 benefits, as I mentioned, that we're going to be introducing to LACOE for the first time is our individual short-term disability insurance, our whole life insurance, and then we're going to talk about some of the benefits of having this type of coverage on a voluntary basis, and then how to enroll. Okay, so these benefits are completely voluntary, so you decide if you want to participate in them. If you do decide that you want to participate in them, you get the convenience of premium deductions out of your paycheck, just like a medical insurance or anything like that. And you also get nice discounted group rates because they're being offered through your employer, so there are some advantages there. All right, so first we're going to talk about our individual short-term disability insurance. So disability insurance essentially is protection on your income. We're so used to getting insurance such as life insurance or homeowners insurance, all those things like that. We're used to doing it. Sometimes it's the law to have that type of insurance. In the insurance industry, we do believe that protecting our income is probably your absolute most important asset, because if you can't come to work due to an injury or illness and you're not earning a paycheck, that's probably going to impact you from being able to pay the rent, keep food on the table, keep the kids going to school, all of those things that we have to do every day. That's going to help protect you so that it doesn't put you in a financial hardship. So disability insurance is going to step in and pay you a percentage of your monthly income if you're ever not able to come to work due to an injury or illness. And so that will need to be supported by medical information from your physician, okay? So the short-term disability insurance that's being offered through LACOE it's giving you 2 different options. So you can elect the low option, which is going to be a 30% income replacement, or you can elect the high option, which is going to be a 40% income replacement, and that's a monthly benefit. So that's going to be up to a maximum of $3,000 per month, and it is a tax-free benefit. So if you're getting, that full $3,000, if you elected the high option and it's that full $3,000, you're going to get a check for that full $3,000. Okay, it's not taxable. Now, disability insurance always has a little feature called an elimination period. And what an elimination period is, it's the amount of time that you have to satisfy being disabled before your benefits are going to begin. So this plan has a 7-day elimination period. So what that means is that for that first week that I'm disabled, you're not going to receive benefits. You're going to need to have some savings or some vacation time or something like that to get you through that first week. And then on that 8th day of disability is when you would start receiving your benefit checks from Unum. Okay, and that's 8 consecutive days. It's not 8 business days. Okay, now the benefits can pay for up to 6 months as long as you have the medical documentation from your physician supporting that. Okay. So the benefit can pay for up to a full 6 months. And this coverage is for employees only. This is not a benefit that you can enroll your spouse in, because this is ensuring your income from this job, okay? And this does cover off-job accidents, and sickness obviously would not be considered an on-job thing. But if you got injured at work, that would be something that workers' compensation would step in and pick up on. Okay, so this is for off-job accidents and then any type of sickness. Okay, the premiums for this benefit, they're going to be based on your age at the time of enrollment and your salary. So whatever that 30 or 40% is specific to you. So everybody's premiums may be a little bit different. But your premiums are going to lock in at the time of enrollment. So that's a really, really great benefit. It's very advantageous if it's something that you're thinking about looking into. I highly encourage you to look into it now because your premiums will lock in. So you want to get those locked in. You won't ever see them increase over time. unless you increase your coverage amount. But whatever you enroll in during this initial enrollment period is always going to be locked in at your issue age. And the coverage is all completely guaranteed issue this year only. Who can tell me what guaranteed issue is? Yes?
No medical questions are asked.
Exactly, no medical questions. That is a really, really big deal in the insurance world. If anybody in here has ever tried to get any type of insurance outside of your employer on your own, you would know that you probably have to do some pretty extensive medical underwriting, whether it be a medical questionnaire. Sometimes you have to do a physical exam, blood work, all those things that's not fun. Nobody wants to do. Nobody wants to schedule the time to do that. So because this is the very first time that this is being offered to all the LACOE employees, you get this coverage completely guaranteed issue, and that's this year only. So if you opted out of the coverage this year and then you decided next year at annual enrollment that you wanted to enroll in that coverage, there will be some sort of medical underwriting required. It probably won't be a physical exam, but there will be a health questionnaire that you would have to complete in order to get that coverage down the road. Yes, for the short-term disability, the issue age limit in California is age 64. Great question. Okay, yes, do we have a question in the back? Great question. Yep, I'm just about to cover that. So there is a pre-existing condition limitation on this plan. There's one for pregnancy and then just a regular pre-existing condition. So just the normal pre-existing condition limitation is 12 months. And the way that we look at that is if you go out on disability in the first 12 months of the policy, we're going to look back 12 months prior to the original effective date of your policy just to make sure that you weren't already receiving medical treatment or advice from your physician for something relating to that reason that you're going out on disability in those first 12 months. After you've had the policy for 12 months, we no longer look back at your history. So that's for any normal type of disability. When we're talking pregnancy, it's a little bit different. We have a 9-month pregnancy exclusion. And so what that means is that we will not cover a normal birth within the first 9 months of the policy. If there were complications to a pregnancy, that's a completely different story. If you had complications to your pregnancy that resulted in you being hospitalized for a different reason outside of just your delivery, that would be treated as a normal delivery. But normal pregnancy, you get a standard 6-week maternity benefit, but the first 9 months of the policy, it would not be covered. So basically that's preventing somebody who already knows they're pregnant from enrolling in the benefit. You wouldn't be covered for that pregnancy, but any pregnancies, ongoing after that, you would have that coverage. Great question. You're not stuck at this premium and this payout forever, but you are basically for the next year. So what you're doing when you're enrolling is you're essentially locking in a benefit amount, and it'll be on your application when you get your custom enrollment packet. It's going to show exactly what 30% of your monthly salary is and 40% of your monthly salary. So when you enroll right now, you're locking in that benefit amount, and then when we come back out next year, we're going to ask for an updated listing of everybody's salaries from your employer, and so that's how that'll be giving you the option to increase your benefit if you have increases that have happened throughout that previous year. Yeah, so that's just for people who are receiving California state disability. It would pay in addition to that, but I don't think that that actually applies to anybody here. Yeah, if there's something else, this does not integrate with anything else, so it would pay in addition to that. Yes. As long as you're not working, you have to be totally disabled, not able to come to work. It doesn't offset with any other benefits.
It's not about not getting
Exclusions? Yep, so there are definitely, like any insurance policy, there's some exclusions, and those will be in your policy and they're in your packets outlined. But some examples would be if you got injured because you were committing a crime. So if you robbed a bank, you trip and fall on the way out, we're not going to pay your disability claim, or just don't get caught, things like that. If you're participating in a riot, there's self-inflicted injuries are not covered. They're pretty straightforward, but things like that, and they're listed in your enrollment packet that you guys are going to get after the meeting. Nope, it doesn't end at age 64. That's just the up to the age that you can enroll. The policy is guaranteed renewable to age 70, but you just can't enroll after age 64. Great question. Yep, that's a great question. So you can only enroll in the benefit or make changes to your benefits at annual enrollment, but if you decide that you don't want the coverage anymore, you're not locked into it. It's not like a lot of medical insurance plans that are payroll deducted. A lot of times you're locked in for the year. These benefits are not like that. So if you need to cancel any time throughout the year, you absolutely can do that. Just know that if you did want to re-enroll down the road, you're probably going to have to answer some medical questions just to get back on the plan, but you're not locked in for the year. Yep, that's a great question. She asked if the premiums are done pre-tax or post-tax. The premiums are done post-tax, and we do that for a couple reasons. One, for the reason that we just talked about, so that you don't have to be locked in through the year, because when you do premiums on a pre-tax basis, you're locked into those plans for the year. But the second and even more important reason is because that's what allows that benefit to be tax-free when you receive it. It's much more cost-effective for you to pay pay taxes on the premium that's coming out of your paycheck versus that lump sum monthly benefit that you're going to get when you're out on disability, and that's when you really need the money most. So that's how we allow for that benefit to be tax-free for you. All right, so I think we'll go ahead and move on to the whole life insurance. Whole life insurance is really meant to kind of be a complement to term life insurance. Experts in the insurance industry say that you kind of should have a little bit of both. Whole life insurance is really meant to be a permanent life insurance solution. This is really meant to be that life insurance solution that's going to take you all the way through to your retirement years, and it's meant to cover those final expenses. The reason why we say it's permanent is because for a couple reasons. One, the premiums don't ever increase. With term life insurance, you'll generally see those premiums, they creep up a little bit, like every 5 years, and then once you get into your retirement years, it can get kind of expensive. Term or whole life insurance, you'll never see an increase on the premium. They lock in for the life of the policy. You will also never see a benefit reduction. So with term life insurance, there's usually a reduction schedule a couple times later in the contract. Generally when you're around 65 and age 70, the value of that policy will decrease. Whole life insurance does not decrease. So it's the same value that you have at the time of enrollment for as long as you keep the policy. And then this policy also has the ability to build cash value over time, and we guarantee that at a rate of 4.5%. So you need to keep the policy for a while for it to build some cash value, but the idea is you get that now, and then that's money that you could possibly use later when you're in your retirement years in a couple different ways. If you needed to loan against it, or you can always buy what we call a reduced paid up life insurance policy, where you take the cash value and you purchase just a straight term life policy and you don't have premiums anymore, which is a really nice option when you're in your retirement years and you're not working and you kind of want to get those expenses down. Or you also, at the time of enrollment, can elect a paid up at age 70 policy. So what that means is that your policy will be paid up at age 70, and then you won't have any more premiums, okay? So really, term life insurance is great. It's good really to have during your working years. That's the policy that you guys already have. You can get a lot of term life insurance for a much lower premium when you're in your working years. And so the idea is kind of have a lot of that when you're in your working years, depending on your financial needs. So if you've got a mortgage, car payments, maybe you've got kids you're putting through school, all of those everyday life things that we want to make sure are protected. But the idea is that as you move into your retirement years, you probably have less of those bigger financial things to cover. And so you can kind of scale back on your term life insurance, because that's when it's going to start getting more expensive. And so you'd have this whole life insurance policy to kind of stay constant with you all the way through your retirement years. Okay, and that's guaranteed. The policy doesn't mature until age 120, so it can stay with you all the way through. Okay. There's also an optional child term rider. So you can add a term rider policy for children, and children are covered up to age 26. And that's going to be just a $10,000 policy, just a term rider. So it's just a little feature you can add on to your policy. Okay. And the way that this policy works, just like that short-term disability, where there's a low option and a high option, your enrollment packets will have the same low option and high option for you. And then you can also, there's also coverage options to get spouse coverage as well. Okay, we'll go ahead and move on to the next slide. So just to kind of recap some of the benefits of these two benefits that you guys are being offered for both the short-term disability and the whole life insurance, the premiums are going to be locked in at the premiums that you enroll in today. Unless you make coverage increases down the road, whatever you enroll in today is going to be locked in at your issue age. So really great benefit there. You get the convenience of payroll deductions for your premiums, so you don't have to worry about paying a bill every month. It'll just come right out of your paycheck if you decide to sign up for any of these benefits. They're all fully portable. So portable means that you can take these policies with you if you are ever no longer working at LACOE. So whether you retire or whatever the situation is, they're your policies, they're individual policies, you own them. Your employer is just kind of sponsoring the payroll deductions and endorsing the benefits, but they're still your policy. If you port those plans and take them with you, nothing will change about the premiums and nothing will change about the plan designs. The only difference is that we just then work out a payment arrangement with you directly. So just be like paying a cell phone or a cable bill. Okay? And then the last point, which is a really, really big deal, both of these benefits are completely guaranteed issue this year. I cannot stress enough how big of a deal that is for insurance. This is the only opportunity to get this coverage completely guaranteed issue. As we mentioned earlier, if you do decline the coverage this year and then decide down the road that you would like to enroll in it, there will be some sort of medical questions that will be required in order to apply for the coverage. So now, how do we enroll? Well, we've officially kicked off your enrollment period, so we decided to wait until after your normal medical enrollment since these are brand new benefits, so it wasn't overwhelming you guys, but we pretty much are allocating the next month to this enrollment. So you don't have to make your decisions today. You're all going to get a custom enrollment packet after the meeting. So you have until November 28th to turn those into Human Resources. This is what we call an active enrollment because it's the first time this is being offered, and because these plans are all guaranteed issue, we do need everybody to make an enrollment election whether you're enrolling or not. So you have a couple ways to make your enrollment election. One, you'll get your custom enrollment packet that we have in the back of the room, and in that enrollment packet, there's a cover letter with some instructions, but there's a whole life insurance enrollment form and a short-term disability insurance enrollment form. And it's already got a lot of your information pre-populated. None of your personal information like social security numbers or salaries or anything like that is visible. It's all coded on there, and it goes back to a barcode that we have on your application in our system. But we've got your premiums and coverage amounts on there. So you can either fill out your enrollment form, and literally if you don't want the coverage, all you have to do is just check the opt-out button, sign it, and then turn it back in. That's all you need to do. But we do need a record that everybody's making a decision one way or the other this year. So that's one way you can enroll. You can do your paper enrollment form, or you can go online to the website highloworno.com, and this information's in your packet as well. And you can actually make your enrollment election online also. So your login is going to be your first initial, last name, and last 2 digits of your birth year. And we're going to send an email out after the meeting today too with these instructions as well. And then your password is just going to be your employee ID number. Okay? And if you have any questions about the benefits, you can call the enrollment line. This information's all in your packets too, guys. And they can answer any questions specific to the benefits. So if you take your packet home, you're at home talking to your spouse or anybody else in your family about the benefits, and some questions spark that you didn't think of while we were here today, call them. They can answer all of those questions for you. Okay, and they're going to be, that's numbers available for the rest of the month, or through November 28th, through the entire enrollment period. Okay, and again, that enrollment deadline is November 28th, and we do need everybody to make an election even if they're waiving coverage. The coverage will be effective January 1st, 2015.